Hey, Zach, thanks for joining me.
Hi, Steve. Thanks for having me.
Well, it's great to have you. I actually wanted to dive into a topic we started to get into, which was how you're starting to see some opportunities that maybe you weren't a few months ago emerging in commercial. Now, I think you said it was kind of anecdotal, not necessarily a huge trend or whatnot, but I wanted to dive into that a little bit more. We've started seeing stress in the market. We've seen the rate picture and the financing picture improve a bit, and we've certainly seen a market that has pockets of strengths and pockets of weakness. But where are you kind of seeing some opportunities possibly popping up here that you weren't before?
Well, it's interesting because we're seeing opportunities across the board in all different types of real estate. One or two places that have come around again that we didn't believe were there for a while are multifamily and development. Um, it's kind of interesting. Everyone said that office is going to die, and COVID kind of, fast forwarded that for a lot of people. Everyone's taking office saying great vacancy, it's never going to survive. Let's convert it, blah, blah, blah. Now we're seeing the other side where they're saying, hey, we're having office shortages, which is what we kind of predicted. Same thing in multifamily. They said we're not going to have any issues here. And we're kind of seeing that on the other side that there's too much multifamily. The only thing in multifamily that's come back that we see that makes sense, we never had the rental incomes to support the valuations previously. People were using these low interest rates to buy at astronomically high prices that were unsustainable. Um, while inflation has been bad in general for everybody across the board in terms of real estate and rents, it's pushed rents to the point um, that the valuations make sense. The reason I say that, when interest rates went up, it held prices firm. So we saw rising rental rates while the prices were not increasing. So you kind of shrunk that gap in the valuations where it started to make sense. So that's come full circle for us. And same in development. You used to develop because it was cheaper than buying and there was a bigger return on your money. And we never saw that before. And while land prices have held steady and conversions have held steady, it started making that value proposition more attractive again, where we could build and actually receive the reward for taking that level of risk of doing the construction, the development. Um, but it's interesting because while this has all shifted and inflation and interest rates, it's all been negative. Um, what we've seen, you're right, there's a lot more deals out there. What we've seen is on the anecdotal side that I was kind of mentioning, a couple years ago, everybody, booming economy, had money, wanted to invest in real estate, and you had tons and tons of equity, and there weren't really great deals. The interest rates were low, no one felt stress, markets weren't disjointed. Now, with that stress, there are great deals out there, but everyone's kind of a little bit nervous about investing, so there's not as much capital to go around. Um, so it's been interesting trying to line up the timing on the two of those. It just never seems to coincide with each other.